Cash flow statement. Cash flow statement is a vital financial statement that provides insights into a company's cash inflows and outflows. This topic delves into the intricacies of the cash flow statement, uncovering its components, significance, and analytical applications. Understanding the cash flow statement is essential for evaluating a company's liquidity, solvency, and financial health. The cash flow statement is a critical financial statement that tracks the movement of cash into and out of a company during a specific period. It provides a detailed summary of the company's operating activities, investing activities, and financing activities, offering valuable insights into its ability to generate cash and meet its financial obligations. Components of the cash flow statement. 1. Operating activities. Operating activities involve cash inflows and outflows related to the company's core business operations, including revenue from sales, payments to suppliers, salaries to employees, and taxes paid. It reflects the cash generated or consumed by the company's day-to-day activities. 2. Investing activities. Investing activities encompass cash flows associated with the acquisition and disposal of long-term assets, such as property, plant, and equipment (PP&E), investments in securities, and proceeds from asset sales. It indicates the company's investment in its future growth and expansion. 3. Financing activities. Financing activities involve cash inflows and outflows related to the company's capital structure, including proceeds from issuing debt or equity, repayments of debt, and dividends paid to shareholders. It reflects how the company finances its operations and investments. Significance and importance. 1. Liquidity assessment. The cash flow statement helps assess a company's liquidity by providing insights into its ability to generate cash to meet short-term obligations. It indicates whether the company has sufficient cash reserves to cover operating expenses and debt payments. 2. Solvency evaluation. Solvency refers to the company's ability to meet its long-term financial obligations. The cash flow statement assists in evaluating solvency by analyzing the company's ability to generate cash from its operations and financing activities to repay long-term debts and commitments. 3. Financial planning. Business leaders use the cash flow statement for financial planning and forecasting. It helps anticipate future cash needs, identify potential cash shortages or surpluses, and make informed decisions about capital allocation and investment priorities. 4. Investor analysis. Investors rely on the cash flow statement to assess the company's financial health, cash-generating capabilities, and ability to sustain dividend payments or fund future growth initiatives. It complements other financial statements and provides a holistic view of the company's performance. 5. Risk management. The cash flow statement aids in risk management by highlighting potential cash flow disruptions, such as a decline in operating cash flows or difficulty in securing financing. It allows management to take proactive measures to mitigate risks and maintain financial stability. Analytical tools and techniques. 1. Cash flow ratios. Various cash flow ratios, such as the operating cash flow ratio, free cash flow ratio, and cash flow to debt ratio, are derived from the cash flow statement to assess liquidity, cash generation efficiency, and debt repayment capacity. 2. Trend analysis. Analyzing trends in operating cash flows, investing cash flows, and financing cash flows over multiple periods enables trend analysis and identifies patterns or changes in the company's cash flow dynamics. Conclusion. In conclusion, the cash flow statement is a crucial financial statement that provides stakeholders with insights into a company's cash flow dynamics, liquidity, and financial performance. By understanding its components, significance, and analytical applications, stakeholders can make informed decisions, assess financial health, and drive business success. Mastering the cash flow statement is essential for navigating the complexities of the business world and ensuring long-term sustainability. Useful expressions. Operating activities on the cash flow statement reflect the company's day-to-day cash transactions. Investing activities track cash flows related to long-term asset acquisitions and disposals. Financing activities on the cash flow statement detail cash flows from debt, equity, and dividend transactions. The cash flow statement provides insights into a company's liquidity, solvency, and financial health. Analyzing trends in cash flows helps assess the company's ability to generate and manage cash. Investors use the cash flow statement to evaluate the company's cash-generating capabilities and financial stability. Understanding cash flow dynamics aids in financial planning and decision-making for business leaders. Cash flow ratios derived from the statement help assess liquidity and debt repayment capacity. The cash flow statement complements other financial statements, providing a comprehensive view of financial performance. Transparent reporting of cash flows fosters trust and confidence among investors and stakeholders. Operating cash flow indicates the cash generated from core business operations. Cash flow from investing activities reflects capital expenditures and asset acquisitions. Financing cash flow shows how the company raises capital and distributes it to investors. Positive cash flow signals financial health, while negative cash flow may indicate liquidity challenges. The cash flow statement helps assess the company's ability to meet short-term and long-term obligations. Comparing cash flows over time reveals trends and patterns in the company's financial performance. Cash flow analysis is essential for managing working capital and optimizing cash reserves. Investors use cash flow metrics to gauge the company's ability to fund growth initiatives. Cash flow transparency enhances credibility and investor confidence in financial reporting. Effective cash flow management is critical for sustaining operations and fueling business growth.